afternoon, everyone. Thanks so much for joining this session. I hope all of you are staying safe and healthy as well. So in this session, we'll be focusing on various aspects with respect to digitization in financial services delivery. Before we get into the discussion itself, let me take a moment to introduce our two distinguished guests. First, we have Hardika Shah. Hardika is the founder and CEO of Kinara Capital. Hardika started Kinara in 2012 to address the challenges in financing small businesses and MSMEs. Today, Kinara reaches about 35,000 MSMEs, impacting about 750,000 lives through Kinara Capital, directly or indirectly. As you know, the focus of the government and RBI's relief measures during COVID has been centered around MSMEs largely. And Kinara is at the front and center of playing a vital role in reviving MSMEs specifically and the economy at large. Also, Kinara is one of those few NBFCs that have embraced technology right from the start. And you can see them innovating continuously across multiple avenues of their operations. So that's why we thought Hardika would be a great resource to share her learnings and help the larger forum. So Hardika, thanks so much for joining. Little bit about Hardika. Prior to creating Kinara, Hardika spent about 20 years as a management consultant with Accenture across US, European Union and Asia Pacific as well. Hardika has also won many awards. She's also an Ashoka Fellow. She earned her MBA from Columbia Business School and UC Berkeley's Haas, which is a joint program. Beyond all this, I thought that the best way to describe Hardika would be this quote, which I will project on your screen now.
Uh-oh. Should I be afraid, Arun?
Not really, Hardika. I think this is something which inspires all of us, so I thought I'll just share it here. Can you see my screen?
Okay.
Okay, let me also read it for everyone's benefit. Start quote, my mission in life is not merely to survive, but to thrive, and to do so with some passion, some compassion, some humor, and some style. End quote. So this is a brilliant Maya Angelou quote that I thought I would share with all of you. Knowing Hardika for more than 5 years now, every meeting, every conversation that you have with Hardika, rain or shine, you will see passion, compassion, same humor, and lots of style. So that's Hardika for you. Thanks so much for joining, Hardika. Appreciate it.
Thank you, Arun.
Okay, on to Shiv now. Shiv is a dear friend who is the co-founder and CEO of Finvigo. Finvigo is an education-focused fintech startup aimed at addressing the challenges in education financing ecosystem. Pavi and Shiv started Finvigo on the back of winning the Harvard Innovation Challenge in 2018. In the last 1.5 to 2 years of their operations, Finvigo has reached over 400 schools in the country, about 10,000 teachers, and more than 100,000 students through their fintech operations. Before Finvigo, Shiv worked as a global engagement manager at Glenbrook Partners, which is into payments. Shiv also has worked with companies like Opportunity International Australia, Microsave, and Intellicap. Interestingly, Shiv is also one of the co-founding members of Intellicash, which is a merchant cash advance business within Arohan right now. Shiv also holds a degree from Shriram College of Commerce in Delhi and a master's degree from Stanford University. Shiv is also an explorer who likes to explore multiple countries, cultures, food. You should ask for food suggestions from Shiv. And more recently, he is into exploring how he can empower schools and the overall education ecosystem. So Shiv, thanks so much for agreeing to come on board. Thanks so much for joining.
Thanks, Arun. Thanks for inviting me to join this panel.
Great to have you. So before we move on to hear from Hardika and Shiv, we thought it would be a good idea to spend about 2-3 minutes introducing the topic itself. And what we will do is after that, we will have a conversation with Hardika and Shiv for about 30 minutes or so. And then we will open out the house for questions. So you can type in your questions and we will take them as they come by, right? So let me project my screen. All right, so why do we think digitization is important, and digitization is important for financial services, and why do we see a lot of companies focusing on digitization today? We've seen technology playing a central role in disrupting financial services delivery over the last 4 to 5 years. We've seen the advent of fintechs and tech-driven businesses directly impacting what do you call the older players like banks, insurance companies, and NBFCs. We've also seen operations of financial institutions moving directly from a branch product focused operations to a fully customer centric operations. What do we mean by that is we've seen the place of transactions moving from branch or an office of a financial institution to directly the customer's household or an office. We've also seen turnaround times for financial services delivery, whether it be onboarding a customer, credit decisioning, or an insurance product offering. Turnaround times have crashed from days and weeks to now we see financial institutions sanctioning a loan in about less than an hour. So that's thanks to technology and digitization. And we've also seen multiple modes of transaction through which people transact today. Gone are the days when you have to wait for an agent to help you in the transaction. Today, you can transact through multiple channels, sitting at your house through your mobile app. You can do that. So these three things we believe has transformed financial services and it has moved the conversation largely to a customer-centric one. And that is where we believe customer-centric and customer ownership is one of the key ingredients to growth of these businesses. And that's why financial institutions are looking at digitizing their businesses to stay relevant. And what are the ways in which they are doing? There are people who are getting a lot of data about us to serve us, where they are building understanding about us, so that they can offer multiple products to us through repeat transactions, so on. And there are opportunities in which they can cater to us as well. That's why customer ownership is important. And there is a race to customer ownership, and people want to serve us better. People want to serve us at our place, at our mode of interest, and so on. So that's why I think financial institutions are looking at digitization. And finally, we also see a lot of startups coming up in the wide variety of financial services, right? There are a number of fintechs across the range of financial services, starting from lending fintechs, insurance fintechs, payment aggregators. There are a bunch of data aggregators as well who are starting up their businesses and offering innovative solutions to clients. So I think digitization is not something on the sides, but it is at the center of financial services delivery today. And given that, we think technology and digitization have become quite the essential to provide convenient, flexible, reliable, and affordable financial services at scale to their customers. And to focus today's discussion, I thought it would be good to have a slide on what are the different ways in which NBFCs specifically are trying to digitize their operations. While we see a lot of NBFCs trying to digitize the full spectrum of their operations, this is a universal process that you see on your screen, which is applicable for almost all different asset classes. Why with nuanced variations within every asset class. So you would have customer onboarding, you would have KYC verification and validation, credit decisioning, disbursements and collections. So within this, we are seeing financial institutions trying to digitize the onboarding process. They are also trying to see how they can have a combination of assisted and self onboarding as well. And financial institutions are exploring multiple modes of onboarding as well, things like websites through their mobile apps. WhatsApp is an interesting channel which they're exploring. The other one is KYC validation. People are coming up with innovative solutions for KYC collecting KYCs from the customers, also verifying and validating whether it belongs to that particular customer or not, which is a key step in the overall decisioning process, right? From that, we move on to credit decisioning, where we see the full spectrum of credit decisioning happening today. There are traditional financial institutions who are still banking on 6 to 7 stages of credit decisioning process that involves KYC collection, credit, personal discussion, credit committee kind of thing. But we also see financial institutions, new age institutions like both Kinara and FinVigo, who have automated decisions where they've cut short the turnaround times really to less than an hour, so to say. And they use a lot of their own data from multiple other sources, and rules and scores to arrive at this sort of decisioning. On the disbursement side, again, thanks to the network created by the government and Reserve Bank of India, we have a way in which financial institutions today can do online real-time disbursement into the customer's bank account. There is also a bunch of innovations, again, from the financial services industry that has led the way to disburse loans into customers' bank account or wallet or through UPI in actually real time as we speak. And finally, coming to collections, again, technology and digitization innovations have leapfrogged to an extent where customers can initiate payment, or the financial institution can request for a payment electronically. And this becomes all the more important in days like this, although financial institutions have started digitizing much before COVID and all this lockdown. But given that the scenario that we have and the new normal that we have, I think digitization is going to play a vital role in transforming financial service delivery itself. With that, I think I will pause here, and we will go to Hardika and Shiv. Maybe we will start with Hardika and hear her thoughts on the digitization of financial institutions to start with, and then we will go ahead from there on.
Well, digitization is here. If we were ever resisting it, I think during this incredible, unexpected time that we find ourselves in with COVID-19, all of a sudden, digitization is becoming front and center, right? When I first moved, I moved to Bangalore in 2011 to start Kinara Capital. And when I first moved to Bangalore, and we would go out and meet customers, most of my customers who are micro enterprises would carry those old Nokia phones. And most of them, I would say at that time, then people would keep telling me there's India, there's Bharat, there's India, there's Bharat. Well, I think India and Bharat are long distinctions that have been long gone. And what we find now is a singular, very forward and active Bharat that is very much here in the digital journey. And so for all businesses, including financial services or all of us, frankly, we have to find new avenues to reach these customers and new ways to reach these customers. All of the pre-geo era, if you go back and look at what the data would tell you, the data would say that the digital footprint was incredibly male, metro, and millennial. But today it's video, voice, and vernacular. And probably during COVID, it is all just food videos to cook, right? So however we look at it, we are finding ourselves and finding our customers very much active online in different modes. And we are all going to have to collectively figure out ways to reach them, both in terms of for customer service. Go ahead, Arun.
Shiv, can we hear from you? Your thoughts on digitization itself to start with, and then
Yes, sure, Arun. So I think, yeah, as Hardika mentioned, I think, digitization is here. I think, it's like, the digitization journey, the digitization conversation had always been there, right? So I think pre-COVID as well, like, financial institutions have been talking about digitization. I think, just that, this current crisis has really made a lot of financial institutions, including us, to kind of accelerate that journey, right? So, financial institutions have been talking about digitization, like, how you had put out, there are different, parts to a customer journey, right? So, you start with, so the same thing, like in our organization, we kind of look at that customer journey in, like, 5 parts. So first we start with prospecting. This is where, like, your salespeople or like your sales organization basically goes and, like, looks at, areas where you have potential customers. So this could be like your offline world, or it could be the online world. The second part is the acquisition part, right? Like where you like found a potential customer, and then you'll have to like get an application, get different KYC, different documents, information. So that we call as an acquisition part. And then, like, you have the entire underwriting part where, like, you got all the information. Now you're like looking at underwriting that particular, application, that particular customer, that particular loan. And then the fourth is the fulfillment piece, right? So where you're like, once the decision is made, then you'll have to do the fulfillment, like, make the customer agree to the terms and condition, get the agreement signed, disburse. All that is a fulfillment piece. And then, like, finally comes the servicing piece, where the customer makes the payment. But it's also not only just repayments, right? There's a lot of thing that goes around in servicing. Like a customer might have a query, the customer might have a statement of account, a need for a statement of account, or they might want to pre-close, or the customer would, like, complete the entire cycle and would want a no due certificate. So all of this comes under the post disbursement part, that is the servicing part. So organizations have always been talking about, like, this digitization of different parts of this journey. Somebody was talking more about digitizing the underwriting piece. Some organization were talking about like digitizing the fulfillment piece. I think with this crisis, we are really talking about how can we digitize every part of the journey, right? Like, I think right now in our organization, what we are really thinking about is like while we've always been thinking about digitizing the underwriting piece, digitizing the fulfillment piece, and digitizing the servicing piece. But I think prospecting and acquisition needs to be digitized in the current circumstances where we are in, because it becomes difficult once we come out of this crisis in the post-COVID world, at least for the next 12 months or so. Prospecting and acquiring customers in an offline world becomes extremely difficult, because there's going to be a lot of discomfort in customers meeting your salespeople, or your salespeople meeting the customers. So I think that piece also has been highlighted from a digitization point of view. And I think that's what we are really thinking about. Like, the idea is that how do we digitize the entire customer journey, not just parts of it. I think that's how, I look at digitization at this point in time.
That's well said on the need to focus on both the employees and the customers as a whole, rather than looking at a piecemeal approach and trying to do one at a time. Yeah, that's an interesting thought, Shiv. Maybe we will pick it from there. I just wanted to understand from you when you mentioned digitization focusing on customers as well. What is your thought process? How do you want to engage the customers in doing the same? How do you go about doing it?
See, that to me is actually the difficult part, right? Because, if you want to digitize your internal processes, I think that's easy to do. Arun, there's some disturbance there. I think you're signed in twice. Yeah. When you're trying to digitize your internal processes, I think that's easier to do, because that's largely pertains to your organization and your people. But I think when you have to like digitize the part of the journey which involves your customer, there's quite a bit of customer dependency, right? So, because your customer should also have the ability to kind of be part of the digital journey. That's where, talking about the acquisition piece, the prospecting piece, and the acquisition piece, right? Like, where do you find your customer? If your customers are entirely in the offline world, although that is changing, like quite a bit of that has changed. Like today, we work with schools, we work with educators, we work with parents, all of them, like Hardika mentioned, there's so much of digitization that has happened on the customer side, So you can actually find a lot of customers, you can acquire a lot of customers online, but still it's not entirely possible. Like 100% of that is not possible. So you'll have to find out different ways of put different railroads, think about different distribution channels to reach out to your potential customers so that you can acquire them digitally.
Arun, I think you're on mute.
Hardika, so what kind of challenges do you think you've come across while addressing customer challenges with respect to digitization?
Well, so in our case, we started with a fundamental premise that we will use technology internally first, end to end, to be as digital and as paperless, and in fact, all paperless, in order to both provide fast service. So our TAT in terms of decision loan, from a first hello to money in the bank can be as low as 5 to 7 days, which is 80% less than what is probably true for a lot of NBFCs that service the MSME sector. And that came at a cost of creating a blended model, because our customers still have a lot of paper trails, and we needed to go digitize that information first, then be able to be as quick and as fast using technology to make a pre-approval decision or a sanction decision or a credit decision in essence. And then how do we expedite the process of dispersing the money, and then what do we do about collections? So in terms of, I'm going to split this up into two parts. If I look at, some of the things that we had to do, we had to really think of the end-to-end journey up front. But we also had to be mindful about not boiling the ocean, because you can get really wrapped up in your own design and be less effective in terms of what the value is of that design, right? Ultimately, there were three simple principles. We wanted to reduce OpEx, we wanted to expedite the credit decisioning, and we wanted to make sure we provide this customer service that builds a level of stickiness with our customer, right? And so when we kept these three things in focus continually, then what we were able to do is get the processes designed to be leaner and to that singular objective. So that's one, probably the biggest learning we have, is how do we be very focused on the outcome, or the value outcome, not just the design outcome, but the value outcome that is being provided in terms of the customer experience, and be able to do that, and then be able to do that quickly, was obviously a much needed requirement, and will forever remain one. Did that answer your question, Arun? I feel like we're swapping sides here on us. So
No. So let me come to you again. So I just wanted to check with you on how would you do it? Do you do it on a full bank manner, and so in terms of trying to design it end to end fully, and then go and reach the customer and do it, or you do one step at a time? Because there are products involved, employees involved, customers involved, and there are many customers again who talk to each other. So you have to make it, you have to ensure that the friction is not there in terms of taking the products to them. So how do you do it? How do you go about doing it?
yeah, I mean, I think the one benefit that we had is that we started our journey very, very early, right? Just to give you a quick brief on that, right? I mean, Kinara has been around for 8-9 years, and we've been digital or paperless in our loan process for pretty much the whole duration. And by essentially having that advantage, we were able to continually improve our, sort of our thought process around it. And we were early, frankly, very early in the journey to be even thinking about this as a possibility, right? So we had the benefit of making mistakes and the benefit of learning from it and then changing quickly, right? So when I so to give you a sense, I think what, from an approach point of view, the approach was like, okay, first thing we wanted to do is operational efficiency. We wanted to build efficiency so that our ability to make decisions came built in, right? So we could do this in 5 or 7 days. So then the question is, well, what data do we need to capture? What data does the customer have that we capture, digitize, and then we do it? Then we have the tech to then run, our own thought process, business rules, algorithms to make a decision. What we have been able to do over time is get better at going deeper and going across, right? So we started with a very simple, let's go across, build efficiency. Now it's about going deeper and let's build more variance, more specificity, more combinations of customer, business, sector, margin details, that then can become more and more intelligent in terms of the decisioning. And so, I mean, I think maybe if I take this as if I were to do it all over again, and this was maybe the biggest takeaway from the early days, which we haven't done in the last 3, 4, 5 years, but in the early days, the problem that you end up having often is you take a paper process and then you kind of try to make it digital. So everything looks the same, right? And that's okay if it's an internal thing, but increasingly when we are in a customer facing thing, and I loved your little diagram that you wrote, that you put up front, that a lot of customer onboarding today is self-onboarding. So we have a chatbot on our website. Now the chatbot has to be written completely differently than an internal application that we use for loan processing, right? Because now we have to think from a customer experience point of view. Now we have to think from how customer even thinks of the question. Now we have to think from how do we make that vernacular so that customer can quickly switch back and forth and answer the question and it still means the same thing. So how you approach the design of this is quite different if you're building it for internal efficiency, internal processing versus customer facing and customer processing. I'll pause there so Shiv can add to this. You're a lot, you're a lot more customer facing than that, right?
No, I think so. So that's an interesting perspective which you put, right? So I think so when you came on board in 2012, you didn't have probably the kind of technology and design thinking, the kind of advantage probably someone like Shiv would have had when he started, right? So maybe that's a question to Shiv. Did you also think about converting the manual processes into something fully digital, or is there a fresh way of thinking that helped you win the Harvard Challenge, Shiv, and offer services to your customers today?
Yeah, so I think as you mentioned just now, Arun, I think we started a journey in 2019, right? So by then, I think a lot of these railroads were already built, right? Like be it the eKYC or debit card based authorization for collection of repayment, e-sign, Aadhaar. So a lot of these railroads were already available to us when we started the journey. So I think in 2019, I think the world was very different what it was 10 years ago, right? So it's like so digitization. I mean, a lot of things how we thought about how we planned were like already digital in a lot of different ways. But to us, the biggest challenge that we still face is like Hardika mentioned, a lot of our customers still have a lot of paper trails. So the visibility that we have on the customers is still quite manual, right? Like for example, we lend to a lot of educational institutions, so 80 to 90% of their transaction is still in cash. A lot of them do have bank accounts. They're all banked customers, but then when you look into their bank statement, you really don't find anything. So that becomes your classic liquid income program, right? So the challenge that we are trying to solve there is really the underwriting challenge. Like how do we digitally underwrite these customers when a lot of their cash flows, a lot of their transaction is still cash based, right? And we also have a lot of customer dependency when it comes to sharing a lot of our digital journey with them. Many of our customers have not set up net banking. So this is on the parents, the loans that we give out to parents, the loans that we give out to educators, right? So they're still in the passbook world. Like I was quite surprised when I saw 30-40% of our customers have not set up net banking. They still have passbooks that they were sharing with us. That at that point in time really cannot make use of bank statement analyzers like Perfios or Yodlee, et cetera, right? So you still have to put a human being behind analyzing those bank statements, whether there is salary credit or not, what is their financial behavior. So I think, we so to summarize our experience on digitization, I think like whilst many of the railroads were already available to us, like Aadhaar and etc., KYC and all of that stuff, but I think we still had to deal with some bit of issue when it comes to complete digitization of the entire customer journey.
Brilliant, Shiv. What I hear from both Hardika and you, there are two different types of technologies that you can offer, or you can go about digitizing. One is design technology, which matches the human behavior itself, so that customers start using it without any friction, so to say. Or the other thing is design technology which changes customer behavior. So I think the former plays well in a scenario like financial services than the later. And what I hear from both you and Hardika mirrors the former, wherein you're trying to set your processes, operations, prepare them in such a way that the customers then are able to embark on this journey with you as well. So that's great. Maybe we will switch gears and focus a little bit on how do you look at digitizing the overall decisioning itself? Because both your organizations, I know, are innovating a lot in terms of how do you take decisions both internally within the organization and also with respect to the customers you serve. So if I can start with you, Hardika, first on how do you look at digitization with respect to credit decisioning specifically and overall organizational decisioning itself?
Yeah. So, credit decisioning, for our journey, right, we started initially. So let me let me step back for 1 second, right? We provide unsecured business loans, and we have been providing unsecured business loans in this 3.5, 4 lakh ticket size for the last 8-9 years. And that's, I've been, I've flip-flopped between, am I fintech? Am I just an unsecured lender? But I have an NBFC. I have 110 branches in 6 states. And so in some sense, I am the blended model that we don't know where to box, right? But part of that challenge is also, how do you decision when the customer's data is not available? These rails we talk about for KYC onboarding, they didn't exist. But even if they did exist, all that tells you is this customer is who he says he is. We still don't have, less than 30% of my customers have GST. Almost all of my customers are less than 1 crore or in turnover. So they don't need to file anything, even if they had GST. So where do I go to get verifiable information, right? So our early decisioning really started with a highly personalized service, which we still do, and then trying to build as many rules as we can, and then, so to say, learning on the job to figure out how do we build these rules and try to codify that. Now we have the benefit of having done 50, 60,000 loans, and we have the benefit of having customers who are in their 4th, 5th, 6th cycle of a loan, and we have benefit of knowing how the customer repayment histories are playing out. And that benefit can only happen and has only happened because we went completely paperless early on. So we were able to capture and consolidate and have all this information at our fingertips. So in this last 18 months, our entire credit underwriting model has shifted, probably in the last 2 years, I would say almost, and shifted from being rule-based to being algorithm-based. And what that means is we are now saying, hey, what are all these interconnections that we see? How do we build that in terms of, pricing the risk, as well as understanding the risk and pricing the risk, or deciding not to take the risk, right? And initially when we started, we were looking at largely a 5-factor model that was driving our, that were business decisions. That is now a 40-factor model. So as more data has come in, as more variance has come in, as our portfolio is also diversified between geographies and businesses and business types, and all of this information we collect manually, our ability to then codify and make a credit decision is also elevated to be able to do that in a way that, in a data set that doesn't exist anywhere. Even today, I can't get this data anywhere else except for what I've built over time. So that has become both, a big advantage in how we think about decisioning and how we will continue to think about decisioning, even as we move into the next phase of our own digitization and transformation, this piece will become sort of the fundamental block around which or from which we will, we'll end up building newer algorithms, better models for decisioning, and maybe faster models for decisioning also.
Fantastic. I think one of the ironies of this whole data thing itself is over the past so many years, not only NBFCs, right, but many NBFCs, banks, and so on have collected so much data. But the irony is we're not able to use that data. Now, thanks to technology and digitization, there are small ways. So we are taking small steps to digitize data at source when you talk to customers and so on, and how to apply that so that 10 years from now, maybe 15 years from now, we have historically, statistically significant data, which you can then verify and take solid decisions on. And I can tell you with a lot of conviction that historically relevant data will play a very important role in decisioning in financial services delivery as we go by. Thanks so much for Hardika. Shiv, do you want to add on to that? What are the ways in which you look at credit decisioning from a FinVigo perspective? Because while Hardika works with the customers providing unsecured loans, you guys work with the entire ecosystem, starting from schools where you do a blend of secured and unsecured, but you also work with school students and teachers, which are diverse set of clientele. So how do you go about building data and probably driving decisioning through technology?
Yeah, so we do face a lot of challenges that Hardika mentioned. So we work mainly with affordable private schools. So to just give you a picture of how an affordable private school looks like. So mostly these schools are located in peri-urban and rural areas. This is where your the low middle class and below who send the aspirational low middle class, aspirational middle class, and people in the lower economic strata send their kids to. Typically, these are like schools that have come up in the last 10 years, have anywhere between 500, 200, actually like starts with about 250, 300 students or about 1,000 students. And they charge a fees of about 10,000 to 20,000 rupees per student per year. So these are like fairly informal setups, typically run by an individual or husband and wife, sometimes involve children as well. So it's like 3 or 4 people who are running the school. So the data availability, the data that we need for underwriting is definitely a big challenge there. And it's also a challenge when we try to lend to stakeholders who are associated with these schools, right? Like, the teachers or the parents who send their kids to these schools. They're also fairly informal, teachers, while they do receive salary into the bank account, but then you take a bank statement and you see 3 transactions or 4 transactions in a month, like salary credit, ATM withdrawal, and then again a salary credit, right? So that's what you see in their bank statement as well. And the kind of the parents, the profile of parents who send their kids to, mostly they are like self-employed or involved in agricultural allied activities. Again, getting the data to underwrite is a big challenge. So I think what we started doing is started looking for proxy variables, and to kind of create a sense of the degree of formalization, the degree of stability. So basically what we have done is we've done an exhaustive exercise of looking for proxy variable that is available. Let's say, take for example a school, right? So what we have done is that we have looked at how long the school has existed, and how many kids are studying in that school, how the school has performed in the board exams in the last 3 years. So we've put together a lot of this, the exhaustive list of variables, proxy variables that we could look for, and then create algorithms or credit model, or whatever you'd like to call it, right? So that's what we have done. So at any point in time, we could go to a school, look at a bunch of these variables, capture those variables, run it through our algorithm, and then we'll be able to say whether we would like to take a risk on this school or not, right? Or as Hardika mentioned, like if you want to take a risk, how do we price the risk? So that capability that we have developed over the last couple of years, in fact, a lot of work has been done even before we started the journey, right? So we spent about 6 to 8 months trying to understand this ecosystem. And this is for the school. And then like, if you're looking at lending to a teacher, so you start looking at a lot of other variables, like whether the spouse is also working in the same school, whether the kid is also going to the same school, which class is the kid studying, whether the kid is in class 8 or class 12. There's a lot of difference between that, right? So we've started looking for these nuanced variables. And using these variables, we've been able to design an algorithm through which we are able to make a credit decision. But I think the journey has not ended yet. I think a lot of it is still dependent on, like, even the variables that we capture is still human driven, right? Like we have a credit personnel who's going to the school, trying to get this data by observing, making observations, by talking to people. I think for us, the journey will really end when we are able to automate the data collection process and also get this data in the most authenticated format as possible. Right, we still dependent on the school to tell us how many students are studying in that particular school, because there's no way to verify it, right? Like, if you have till class 10, class 12, then there are some government records that you can look into. But if it's a nursery and primary school, right, where you have still class 5, I mean, they need credit as well. And, in all fairness, they should be made available. The credit should be made available to them. But then, like, at that point in time, we're largely dependent on the school owner telling us that, hey, I have like 200 students studying in this particular school. And of course, like, he'll give you all the records, but then there's no way to verify it. There's no way to tell whether that is an authenticated, number or not. So we are trying to, work with different ways to find out how we can authenticate this information that we are obtaining from the school. I think that's when we are able to do that. That's when we would be, fairly successful in what we are doing.
Yeah, it's a big challenge, right? Whether the data that you're collecting is reliable or not, to see whether you're making correct lending decision or not. So that's key. And we already have some infrastructure in place in terms of data aggregators, but these data aggregators are slowly coming up, and when they are fully blown and ready to use, I think that is when we can start depending fully on the kind of data that we are collecting from our customers, and also corroborate to see whether we can take lending decisions based on them. So thanks, Shiv. That's super helpful. Quick time check. We have about 17 minutes in the session. I would want to spend about 15 minutes for Q&A. Before that, maybe 2 minutes, given that we've spent the last half an hour on digitization. One of the things that I want to end this discussion amongst ourselves is what are the kind of, while we see there are opportunities and digitization probably is the way forward and things like that, but both Shiv and Hardika, maybe starting with Shiv, what are the kind of risks that you see in digitizing itself, and how do you think one can mitigate the same?
See, I think, there are, as such, there are no risks in digitization. I think, over digitization, I mean, and there's nothing called over digitization, right? Like, I think it's about a matter of time, right? What might seem as over digitization today might be normal, like, 4 or 5 years down the line. I think it's just like, whether you are over prepared for today or whether you are like well prepared for like 4 years down the line. I don't think there are any risks as such in digitization. However, I think, as an organization, I think what you need to be prepared for is that, I think you need to be prepared for digitization right from day one. It's very hard to kind of, build an organization that is driven manually, and then and then after like, few years, you want to like digitize. That becomes, I'm not saying it's not possible, but it gets more challenging at that point in time. I think, it's important to kind of start thinking about digitization from early on. And also, like, plan for scale from early on. And of course, if you're planning for scale, then automatically the answer lies in digitization, right? So I think it is important to build that culture of digitization in the organization right from day one. I think that's something that we have tried really hard right from day one, where if we see a problem, you have two options, right? Like, one, you put like brute force, put your people bandwidth behind it and try to solve the problem. And the other option is that you think with your technology and digital hat on. So I think we have always tried to, choose the second option. Whenever there is a problem, we'll try and see whether there is a solution available to this particular problem through technology or digitization. I think that's a conscious reminder that we try and do every single time we encounter a problem. I think that's something that if organizations who want to be in the digital path, and I think that's something that they should try and do as much as possible.
I have a slightly different perspective, but of course, this is all about customer segmentation, right? So I do think that
I think that's a great point.
Sorry, go ahead, Arun. Okay, so one downside of digitization, at least in the business I'm in.
Hardika, go ahead.
All right, I think Arun is echoing across his two logins or something. All right, I'll keep going here. So one big disadvantage that could happen, and this is where for the customers segment that we service, which is the micro enterprises, is the lack or the loss of personalization or the loss of personalized service, right? At the end of the day, as a nation, we still want to meet somebody. We want to, and now I know we are changing as we speak. We are not here on this kind of a conference as we speak, but still, I do think that loss of personalization is often, like, not everything can be captured, right, digitally, because it's not available. So what happens in a scenario where a customer bounces his EMI, and if we digitally try to attack that problem, we're going to send them SMS reminders and WhatsApp reminders and links to pay on Phone Pay, Google Pay, whatever pay, only to not or miss that, hey, there's a personal situation that's going on. Maybe they got into a car accident, or maybe maybe something else has happened. And that personalization, that last mile, that human connect is something that requires balancing out in this new world of digital. And it's something that and so maybe let me turn this out to Arun, what the question was, which is what would I say to new financial services institutions who are trying to think about digitization is absolutely think digital, start digital, figure out though what is important and valuable for your customer, and where and how to intersect that digital with a level of personalization or physical or contact of any kind that allows you to be relevant to that customer beyond just the technology part of it. So that would be the one thing I would say that's a little that we all need to think hard as we move from an old world to a new world model. Go ahead, Arun, I'm back to you. You're on mute.
No, so lots of rain around, and I think it's disturbing my bandwidth. So anyways, thanks so much for bringing the human element into that whole thing. And one of the things that we keep seeing in our own work also, to an extent, Shiv also touched, is the moment you take decisions without people involved and try to enforce technology on them, that is going to take you nowhere. But the moment you think of technology as a culture in the organization itself, that is something which will take you leaps and bounds into the future. So thanks so much to both Shiv and Hardika for those thoughts. We have about 10 minutes now. I do want to open it out for Q&A. We have about 12 questions so far. 4 of them you've already taken. Maybe I'll pick up a question randomly. This is from Nisha Sharma, who has an interesting question. So we're talking about different financial service providers across the spectrum, right? Credit, savings, and so on. There are people who are already doing it for years and decades together, who have a lot of data, but there are new players who are coming into lending business and so on. So how can they leverage the collective data capabilities of financial institutions? Can there be a collaboration? Can we think of a way in which sharing data between multiple participants? Hardika, do you want to take it?
Yeah, sure. Yeah. I mean, the short answer is yes, of course. The slightly longer answer is it needs to provide value, right? And so if, if you're, because everyone is going to want to protect their competitive advantage. So if, for example, if you came to us, to Kinara Capital, and you wanted us to open up our data to you, and there is value in doing that, where say we can co-create a product that we are not the right partner to service the customer for, but you might be, then absolutely, there's a lot of opportunity for us to collaborate in that scenario and figure out what is it that you're providing that can, enhance the customer experience and build that stickiness for now, not only us, but also for you. So yes, I think the answer is yes, and we need to dig deeper to figure out what the value point is.
Fantastic. The next question, maybe I'll pick up from Harsh of Magma. So he's asking, have you guys used e-sign for loan agreements? And if yes, what is your experience been in the lower courts in semi-urban and rural areas? Shiv?
Well, I mean, we do use e-sign, but we are still too early to, face any, arbitration challenges. But yeah, the answer to that question, I don't have a full answer to that question, but a partial answer to that question is yes, we do use e-sign in our processes.
Thanks, Shiv. Harsh, hope that answers your question. There are a couple of questions around security, safety itself with the advent of technology and digitization. You have to think of data theft and data privacy itself. How are you guys thinking about it?
Yeah, I mean,
Hardika, do you want to?
Sure. I mean, of course, it has to be front and center. And the best way to do it is to partner with great product companies, right? We are not a product company. We are a financial services delivery last mile service company. And so when we partner with Dvara, for example, that is precisely the reason why we do that, is to make sure that the product companies who are experts at this have the infrastructure, have the data quality. And by the way, we are regulated by the RBI. We are audited by the RBI. We have to report our vulnerability on our data side to the RBI. So we get highly governed and to demonstrate that we are up to date on all of our data security measures, right? And so some of the things we have seen in the past, where there's, and I was reading in the news the other day about, certain car rental services having had a data breach, perhaps a regulator also brings for us a level of further compliance, not just as not just from our own side, but also from a regulatory side that requires us to be at the highest level of security. So.
All right. There is an interesting question from one of the participants. In fact, two parts to the question. First part is, how do you think your customer will respond to more digitization? That I think both Shiv and Hardika elaborated quite a bit during the discussion. But the second part is interesting, which I would request both Shiv and Hardika to weigh in, where he asks, has your typical customer changed during this digitalization journey itself? Shiv, do you want to start?
Arun, I couldn't hear the question properly. There was a bit of a disturbance in the line.
Sure. So maybe I will repeat. So this person has two questions. One is, how do you think your customer will respond to digitization, which I think you and Hardika elaborated pretty well during our conversation. But the second question is interesting, which says, has your typical customer changed because of digitization itself?
Oh, well, definitely.
Or it remains the same?
Yeah, I think definitely. I think we have seen a lot of our customers adopting technology quite well. A lot of them has changed, along the way. I think, what technology brings to all of us is, of course, efficiency, as Hardika pointed out. But I think, a couple of more things that we personally feel that technology brings to all of us, both the organization as well as the customers, is that, definitely convenience and visibility. right? Like, convenience more for the customers and visibility for, your internal team members, right? So when we introduce technology, or when we try to introduce technology whenever there is a need, for a couple of reasons why customers adopt technology, and there's reasons why our employees adopt technology. Customers typically adopt technology because they see a lot more convenience in that particular. I mean, initially it might seem formidable, but over a period of time, they realize that's huge convenience that is being offered to them through that piece of technology. And for our employees, for our team members, I think, when we introduced technology, we see that one important reason why they would embrace technology is visibility, right? Like, the sales organization that we have built within FinVigo, with technology, they get a greater visibility. Like, if I bring in a customer into the system, where does the customer stand exactly? What happened to that particular system? When is that file going to get disbursed? If it is stuck, where is it stuck? For want of what is it stuck? So that kind of visibility that technology is able to bring, for that particular reason, our team members are able to, adopt technology. And similarly, from a consumer point of view, it's a convenience that helps them adopt technology and change along with it.
Sure. Hardika, do you think your typical customer has changed because of digitization, or it has evolved? What are your thoughts on it?
Yeah, my customer segment has remained the same. We've been in the 3.5, 4 lakh average ticket size segment, which means our customer type has pretty much remained the same through the duration of our journey. And this has been very important for us, because for us, it is not just about building a large book, it's about building a large book for the right customer segment that has been financially excluded most of the times. So from that perspective, the segment has remained the same. However, our customer is evolving, right? Our customer is more and more online, is more connected in, you will see Facebook regional pages, right? There's so much activity going on. And so we are finding that our customers are plugging in and getting more digital post geo or post wherever data has almost become free. And that is shifting and changing how we interact with them now than it was before.
Perfect. Maybe we have time for one final question. And this I thought was interesting. It comes from Kapil. So he says there is a bunch of data that you collect through your digital channels, right? Either through self-onboarding with the customers or through your field officers or whatever. And there is a huge amount of data which lies manually, which are gray areas, right? So how do you train your workforce to sort of use both and then come up with decisions?
Well, so in terms of training workforce, it's an ongoing, never-ending, continual learning experience for both our employees and on us, because we're constantly upgrading our tech and we've got to go back and redo it again. So the question around, what we're talking about is in essence, at the end of the day, it's a little bit like those personality tests we have probably all taken, right? You get asked the same question 18 different ways to kind of zone in on where you are on this personality spectrum. In some sense, we are doing the same thing with our customer data. We're trying to ask for this, then that. Shiv brought up the point about proxy indicators, right? That's another data point. So you're just trying to overlap these data points to try to get as close to the kernel of truth as is possible with what is available. And so the idea is that different parts of the organization are asking similar-ish questions so that we get closer to that informational, sort of kernel. And that's really it. There is no perfect data, right? Just like there aren't perfect people. So we try to kind of blend both of them to come up with the best decision. May not be the perfect decision, but at least it's the best decision we can make at a point in time.
Yeah. So yeah. Just to add to what Hardika said, so, I can bring in an example of what we do. So, so we focus on the entire ecosystem, right? So of course, we lend to the schools, we lend to teachers, we lend to parents. We also lend to the vendors and suppliers of the school ecosystem. So what, give this model of working in the entire, across the ecosystem gives us is unique vantage points, right? So again, like, the same point what Hardika mentioned, but, this is an application of how we do it, right? So, when we lend to vendors, we know which school is paying the vendor on time, right? So that kind of gives us a sense of, the payment behavior, the financial behavior of different schools that are buying products from that particular vendor. And when we're lending to teachers, we know, which school is crediting this teacher's salary on time, right? So that's another data point that we pick up, whether this particular school, whether it is crediting the teacher's salary on time or not on time. So that's another data point that we pick up. So by having presence across the ecosystem, we are actually collecting a lot of data points, and these data points are used for, underwriting different products. The data point that we collect while we give loans to vendors is actually used while we underwrite a loan for the school. The data point that we collect when we are giving loan to a teacher is actually used when we are underwriting a loan for the school, right? So this is another way how we kind of collect data for one particular reason, and then we kind of use that for underwriting a different loan on a different instance.
Great. Thanks, Shiv. I think we've overshot our time. We can go on for another couple of hours, but I think both Hardika and Shiv are super busy normally, and more so in these trying circumstances. Hardika and Shiv, thanks once again for joining. It's a pleasure to have you both on this webinar. And to the participants, thanks so much for joining. You will also get a link with the recording as well. I want to end with whatever Hardika said towards the end, which is we are not perfect people, but we have to manage the situation in such a way that we are getting closer to perfect in terms of the decisions that we make using technology or other means. Thanks once again for joining. We will host you in another sessions soon.
Thank you for having us.
Thank you so much, Hardika. Thanks, Shiv. Thanks so much.
Thanks.